So 46,000 into 9% each for CGST and SGST, you will get 4,140 and 4,140. Outward supply is nothing but sales and inward supply is nothing but purchase. So what will happen here? Sales is nothing but you will be collecting the tax and remitting it to the government. So 45,000, 1,53,000, 1,53,000. If you total it, you will get 1,35,000, 2,08,000 and 3,03,000. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session number 2 on unit number 3, that is input tax credit. Yes, dear students, in this particular session, we are going to solve a few problems with respect to input tax credit. In the earlier session, we discussed about what is input tax and how it works and who are all the people eligible for input tax credit and what are the criteria about the theoretical aspects we discussed in the earlier session. So in this particular session, we are going to solve the problems, the different kinds of problems under input tax credit, about how to compute input tax credit or how to compute input tax and output tax and how to set off these two and how to get the net GST payable. About this concept, we are going to solve the problems in today's session. So let us get into the problems. Problem number 1, Jagrut traders supplied goods at rupees 46,000. So Jagrut traders, they are supplying the goods, they sold the goods for rupees 46,000. They received inward supply of goods valued at 20,000. That means they sold the goods for 46,000, but for what price they purchased? They are like a middleman, okay, or the manufacturer. So that they sold the goods for 46, but at the time of purchasing the goods, at what rate they are purchased? At 20,000. So the supplier has charged state GST at 18%. Calculate the tax payable by Jagrut traders. That's it. So here, what is the tax charged by Jagrut traders and what is the tax payable by the same trader that you are supposed to find out. So here, output tax on outward supply, first we find out. Okay, here just assume the transaction is happening within the state and we are supposed to impose CGST and SGST. So make 3 columns: particulars, CGST and SGST. So mainly we have 3 types of GST: CGST, SGST, IGST. If the transaction is happening within the state, then CGST and SGST is applicable. If the transaction is happening between 2 states like Karnataka and Tamil Nadu, then IGST is applicable. So here they have not mentioned whether the transaction is happening within the state or between the state, right? If nothing is mentioned, what you are supposed to do? You are supposed to consider the particular transaction as intra-state supply. That means the transaction is happened within the state. So then which tax is applicable? CGST and SGST is applicable. So here, first we are supposed to take the outward supply. That means the supply made by the Jagrut traders. So what is the price? It is 46,000. So 46,000 into 9% each for CGST and SGST, you will get 4,140 and 4,140. Right. Next, less ITC on inward supply. That means at the time of purchasing the goods by paying 20,000, at the time also they have paid tax, no? The same rate of tax of 18%. Just assume that. So 9% each on 20,000 on CGST and SGST. How much you will get? 1,800, 1,800. So he is supposed to pay the tax of rupees 4,140 on the sales. But at the time of purchasing the raw material or the particular goods, for what price he purchased? For 20,000. Obviously, you have to pay tax, or you have already paid the tax at the time of purchasing it. So what is the tax paid at the time of purchasing? 1,800, 1,800. So now what I will do? I will not pay 4,140. I will take the advantage. I will take the credit of this 1,800. I will set off that 1,800 with 4,140 and I will pay the remaining amount of 2,340 under CGST and the same amount of 340 under SGST. So this is how you are supposed to set off the input tax and output tax. You are going to set off the input tax against the output tax. Moving further to the next problem. Problem number 2. Mr. Madhu, a supplier, gives the following details. Okay, compute GST payable. So here Mr. Madhu gives the following details. By using this information, we are supposed to find out the GST payable. So here you can see sales is given, that is intrastate and interstate. So what is intrastate? Intrastate is nothing but within the state. Intra, I-N-T-R-A, intra is nothing but within the state. Interstate is nothing but, interstate sale is nothing but between the two states. Okay. Next, outward supply and inward supply. So here outward supply is nothing but what? Sales. Outward supply is nothing but sales, and inward supply is nothing but purchase. So what will happen here? Sales is nothing but you will be collecting the tax and remitting it to the government. Okay. Purchase is nothing but you will be paying the tax to the supplier from whom you are purchasing the goods or the raw materials or the inputs. So here sales is also given, purchase is also given, and opening balance of input tax credit is also given. That is the opening balance of ledger balance of your ITC. So under IGST you have balance of 40,000, under CGST you have balance of 30,000, under SGST you have balance of 70,000. And the supply are exclusive of GST at 18%. That means all this transaction is chargeable at 18% of GST. So by using this, you are supposed to find out the GST payable or the net GST payable by this particular supplier, that is by Mr. Madhu. So first, let us solve the output tax payable, or what is the output tax for this particular transaction. So on what we impose output tax? Output tax is imposed on sales, right? On sales. So computation of output tax, particulars IGST, CGST and SGST. Okay. So now we will look into the sales column here. So here you can see outward supply is nothing but sales. So intrastate sales. So what is the value we have? 12 lakh rupees. So 12 lakh rupees worth transaction has happened, that is within the state. So 12 lakh. So which tax is applicable? Yes, CGST and SGST is applicable. So the rate of tax is 18%, 9% CGST, 9% SGST. On this 12 lakh, how much you will get? You will get 1,08,000 and 1,08,000. Next, interstate supply with respect to sales. So what is the interstate supply we have? Here you can see 4 lakh rupees we have. So 4 lakh into 18%. So interstate is nothing but between two states. IGST is applicable. So compute 18% on 4 lakhs. How much you will get? You will get 72,000. Right? That's it. We have only two transactions, and write down that two transactions, that is intra and inter. Now total it. So 72,000 you are supposed to pay under IGST, and 1,08,000 you are supposed to pay under CGST, and 1,08,000 you are supposed to pay under SGST. So this values is called total tax on outward supply. That means the tax you are supposed to pay to the government. And one more thing, this particular problem will be asked for 15 marks. Okay, this is very important concept, and they'll be asking for 15 marks in your main exam. So please concentrate on this. So next, after this, you are supposed to compute the input tax payable. That means whatever the input tax you paid already on purchase of inputs or purchase of raw materials. So what is the amount you already paid, that we compute. So here input is nothing but, yes, it is on purchase. So always the input tax will be computed on purchase. So purchase is nothing but what here? Inward supply. Inward is nothing but purchase. So computation of input tax, particular IGST, CGST, SGST. So intrastate supply, what is the value we have here? Intrastate, yes, it is 5 lakh rupees. So 5 lakh into 9% each for CGST and SGST, you will get 45,000, 45,000, right? Next, interstate, it is rupees 1 lakh at the rate of 18%. So you will get 18,000 rupees of IGST. So total tax you already paid on input or the on inward supply is 18,000 under IGST, 45,000 under CGST and 45,000 under SGST. So first you have to compute the output tax and the input tax. Next we set off that output tax and input tax. So here for this also it's the same format, particulars IGST, CGST, SGST, and the heading is computation of net GST payable. So opening balance of ITC, it is already given in the problem, right? Here you can see opening balance of ITC, it is given 40,000 IGST, 30,000 CGST, 70,000 SGST. Same thing, just you are supposed to write down here. So 40, 30 and 70. That is the opening balance. Add tax on inward supply. That means in account already have this much, and add the tax on inward supply. Whatever you calculated, whatever the tax calculated on inward supply, that is on purchase, just add it. That is 18,000, 45 and 45. So 18,000, 45,000, 45. Now total these two, you will get 58,000, 75,000 and 1,15,000. This value is called total ITC available, that is input tax credit available. That means in your account at present you have 58,000, 75,000 and 1,50,000. So how you will be having that balance in your account? Because at the time of purchasing the raw material you already paid the tax. No, whatever the tax amount you are going to pay, that will automatically come and the credited in your ITC account, that is input tax credit account, if you have fulfilled all the criteria. That is how you have this balance in your ITC balance account, that is opening balance account. Next, from this available ITC less outward tax, that means output tax. So what is the output tax you are supposed to pay here? 72, 1 lakh each, 1 lakh each. So now you write down that output tax is how much you are supposed to pay? 72, 1 lakh each, 1,08,000. See here in your account you have 58,000 rupees under IGST. But how much you are supposed to pay? You are supposed to pay 72,000, right? So whatever the amount you are supposed to pay is more than what is the balance you have in your account. So still how much you are supposed to pay? Still you are supposed to pay 14,000 rupees. Correct? Still you are supposed to pay 14,000 rupees. So in your account you have 75. But how much you are supposed to pay? 1,08,000 you are supposed to pay. So still you have to pay 33,000. Next, in your account you have under SGST you have 1,15,000. Okay, but how much you are supposed to pay? Just you are supposed to pay is 1,08,000. So what is the remaining balance you have still? Yes, in your account still you have the balance of 7,000. Here you have negative balance of 14,000 and 33. That means still you have to pay 14,000 of tax and 33,000 of tax under CGST and IGST. But here under SGST you have excess of 7,000. So what you will do, if you have excess of 7,000 in SGST, you can set off this with IGST account. Only with IGST, not with SGST. In case if you have excess in CGST, you can set off with IGST, not with SGST. In case if you have excess in IGST, you can set off with CGST first, then SGST. That is how the set off will work. So you have excess of 7,000 in your account in SGST. Now you are setting off it with IGST. So you set off this IGST 7,000. Still how much you are supposed to pay? Yes, still you have to pay 7,000 under IGST and 33,000 under CGST and nil, that is 0 under SGST. So this is how you are going to find out the net GST payable by the supplier after setting off the input tax and output tax, and after setting off the IGST, CGST and SGST negative and positive balance. So this question will be asked for 15 marks in your main exam compulsorily. So concentrate more on this. It's very easy, just you have to understand the concept of how this set off will work against the input tax and output tax. Next one, problem number 3. Mr. Raghu, a supplier, gives the following details. Compute GST payable. So sales intrastate and interstate with respect to outward and inward. That is with respect to outward sales and inward with respect to purchase. It is given intrastate outward supply sales is 30 lakhs, purchase is 17 lakhs. Interstate sales is 8 lakhs and purchase is 2 lakh 50,000. And the opening balance of ITC, that is input tax credit, is given. IGST 90,000, CGST 55,000, SGST 1,50,000, and just you have to assume that the rate of GST is 18%. So now let us solve the problem. So first one, computation of output tax. Computation of output tax. Intrastate supply. So what is the intrastate supply here? Yes, it is 30 lakhs. So 30 lakhs into 9% each, you will get 2 lakh 70 and 2 lakh 70. Next, intrastate supply. Okay, first one is intrastate supply. Second one is interstate supply. So interstate supply, what is the value we have? Yes, it is 8 lakh rupees. That means between two states, we sold goods worth rupees 8 lakh. So into 18%, how much you will get? 1,44,000. So now what is the total tax you are supposed to pay? Under IGST, you are supposed to pay 1,44,000. Under CGST, 2,70,000. Under SGST, 2,70,000 you are supposed to pay. Next, computation of input tax. Computation of input tax. Same format, particulars, IGST, CGST and SGST. So intrastate supply with respect to purchase. So what is the intrastate supply we have? 17 lakhs. So 17 lakhs into 9% each for CGST and SGST, you will get 1,53,000, 1,53,000. And interstate supply, but that is between two states. What is the transaction value we have in the problem? Here we will take 1 lakh into 18%. You will get 45,000. So here in the problem we have 2,50,000. So 2,50,000, on that 2,50,000 what you are supposed to do? You are supposed to calculate 18%. Okay, 18%. So you will be getting nearly 45,000. You will be getting 45,000. So 45,000 is the IGST. So now amount, what is the amount payable? That is already paid under this input tax. You already paid 45,000 under IGST, 1,53,000 under CGST and 1,53,000 under SGST. So now finally compute the net GST payable. So the net GST payable, the format is same, particulars, IGST, CGST, SGST. First what you are supposed to write? First you are supposed to write the opening balance of input tax credit which is there in the problem itself. It is given here. IGST is 90,000, CGST is 55 and SGST is 1,50,000. The same thing you are supposed to write down. 90, 55, 1,50,000. Right? Next, add tax on inward supply. Tax on inward supply. So what is the tax on inward supply? We find out 45, 1,53,000, 1,53,000. So 45,000, 1,53,000, 1,53,000. If you total it, you will get 1,35,000, 2,08,000 and 3,03,000. So here less output tax. So in account you have 1,35,000, 2,08,000 and 3,03,000. Now from that input tax less output tax. So what is the outward tax you are supposed to pay? 1,44,000, 2,70,000 and 2,70,000. So in account you have 1,35,000 but you are supposed to pay how much? 1,44,000. Still how much you have to pay? You have to pay 9,000 rupees. In your account you have 2,08,000. Okay. But how much you are supposed to pay? 2,70,000. So here what is the balance? 62,000. Yet you are supposed to pay 62,000. Next, 2,70,000 you are supposed to pay, but in your account you have 3,03,000. Still you have the excess amount of how much? Yes, 33,000. So here you have the excess amount of 33,000. So now what you will do? So you cannot set off the CGST amount with SGST or SGST amount with CGST. You can set off the SGST with IGST and CGST with IGST, not with these two. That will not happen. So if you look into that, what we will do, we are going to set off the excess amount of rupees 9,000 with this particular SGST. Okay, not with SGST, with CGST, you will get the balance of 53,000. That 53 will be called as the net GST payable. So this is how we are supposed to solve. And again, I will be telling you this question will be asked for 15 marks in the main exam. So concentrate more on this to score good marks with respect to this particular concept. So with this, I'm going to wind up the session. I'll meet you in the upcoming session. Until then, thank you all. Have a nice day. Namaste.